Hey, welcome back to week 2 of the boot camp. Hopefully you guys have got stuck in week 1 and you're getting a bit more comfortable with using the DOM and reading the order book, and hopefully you can start to see those big buyers and sellers, and maybe you've even been able to scalp out a couple of ticks here and there. Like I said, it doesn't really matter about making money, it's just about getting a feel for things. This week we're going to be taking a bit more of a close look at volume profile. Now you should be a bit more familiar with volume profile, and you've probably even been following along with the particular trades that you've been seeing each day. Because as you know, you can actually see the prices that are trading, and you can see the volume slowly growing each time there's a trade taking place. So what I want you to start doing now is start thinking about what volume profile really represents. And the best way I can describe it is that when people sort of think about the idea of support and resistance, that's usually something that's associated with charts. So if you look at the chart down here, we can see along this level that prices have come up and tested that level along there a couple of times. And, conventional wisdom would suggest, well, that was once a resistance level. But the truth of the matter is that you really need to use volume profile to define what sort of support and resistance is, and really what a range is. Because if you look on the histogram here, we can see that prices traded up to 124.10 half, and 5,500 contracts have traded here, and there's only been a few trade at that price level above that. So whilst on a chart you would see that this price here would be that very top, in reality the top of this kind of range or resistance, if you want to call it that, would actually be this price here, because that's where prices have traded to. So people who are trying to enter trades here, it's kind of a no man land kind of area. It's likely that price isn't actually going to get up there, and if it does, it's probably going to break through these highs anyway. So what we're trying to do is identify what are real ranges, and real ranges to me are areas where there's big clumps of volume profile. So in this instance here, we can see that there's kind of two areas where prices have traded. This is bottom area, and then it's been sort of light volume here, and then there's been a bit more here. So to me, these are kind of two separate ranges where on a chart, you can't really see that. And as you can see here, it doesn't really look like anything much at all, does it? It's just prices have gone up and they've gone down, and you'd say that's the top and the bottom's down here. And, that doesn't really clear anything up. So what we want to do is use this volume profile to sort of add another layer to our trading approach, I guess we'd call it. So this week, we're trying to identify support and resistance areas effectively, but I want you to focus on the areas where there's been very high amounts of trades take place, like in this instance right there or right here. And also where there are almost ledges. I call them ledges because it's a big difference between the two price levels. So down here we can see that maybe 2,000 have traded there, and up here there's about 5,500. So there's a significant difference, and they show up on charts pretty clearly. You can get ones that are even bigger than that. And if you can imagine a big buyer sort of sitting there scooping up prices, like in this instance here where we're trading now, what's really going on is if that buyer is sitting there scooping up prices and they're prepared to pay, 0.9 half, and they're not prepared to pay 0.9, say, that's going to create a ledge effectively, because what happens is they're buying at this level as much as they can, and they're not letting the level below even get a look in. So that's sort of creating a ledge. But where the principle is still the same, that if that buying has been happening there previously and we come back and trade at that price again, well, there's a chance that they're still going to be buying at that level, and that's going to help us, boost our chances of getting a winning trade. So this week we're going to be sort of building on the last exercise. We're still looking for those big buyers and those big sellers, but I really want you to focus on those two areas where there's either a really high volume peak or there's really a bit of a ledge between the two. And you can even start look at where there are very, very low areas of volume and what happens there. Does price just go straight through there, or does it sort of stop there? Because the conventional wisdom is really that price kind of gets sucked back into these areas where a lot of trades have previously happened. So, like I said, this doesn't necessarily show up on a chart. You're not really seeing it, but when you pull up your sort of volume profile histogram, you're going to get a real inside look at where the market's actually going to trade and where it's going to hopefully or potentially get sort of sucked into those regions. So we want to sort of just get familiar with what happens in those areas, and it's you're sort of training your brain to sort of adjust to what happens and almost develop your own sort of patterns in your head as to what happens in those areas. So I want you to sort of continue what you're already doing and still focus on trading in the morning, because that's when the biggest traders are around. And if you can't trade in the morning, maybe the last couple of hours of the trading session, they're usually the best times of day when the biggest traders are around. So let's continue to focus on those areas, and this week just focus a bit more on the volume profile and what happens in those particular areas, and continue trying to make a couple of ticks and just do your best. And like I said, stick with it. This isn't going to happen overnight, but in a few weeks you're going to have a really, really good fundamental understanding about how price action really works, and you're going to be well ahead of 99% of traders out there who are relying on charts and really missing what's actually going on. So good luck this week, and I'll be back next week with some more exercises to build on what we've already done.